Amazon stock dropped 90% during the dot-com bubble. Today, it's up about 50,000% since then. What does it tell you? Well, it tells you things that you might not have thought of, one of which is there is no way on earth somebody is going to hold that company through a 90% drop unless they're comatose, and then onto a 50,000% return, other than comatose or Jeff Bezos. The vast majority of people will either panic or through boredom exit. Those are the two main dangers, panic and boredom. In any event, before Amazon dropped 90%, it didn't fit all the criteria of a company you should invest in. Nobody knew it was going to be such a big one. So don't beat yourself up over it that you didn't buy it when it was so cheap. I didn't buy it when it was there because there was no inkling at that time it's going to become the world's most expensive company, or one of the world's most expensive companies. So the actual lessons are not the ones which people always tell people just buy and hold forever. That would be stupid, because then you might as well say for everything and anything, just buy and hold forever. How does that work out? It doesn't give you 50,000% plus returns, of course. The fact of the matter is you should be looking for the kinds of companies at the time they look undervalued, high growth, with good dividend yields, good cash return on capital invested. Amazon, during those times it fell for a very good reason. Not least of which it was incredibly loss-making. So when the time is right, but you mustn't time the market, well, fine, take a 90% loss, but they don't all go up 50,000% above. No, when the time is right where a company is undervalued, growing, and looks good, such that you can avoid panic and boredom. How will you avoid panic and boredom? You'll avoid boredom by saying, well, I know it might deliver 0% for a number of months, even years, but I like it. And you'll avoid panic by saying exactly the same thing. I know it might drop steeply for a number of years, but I like it. In other words, what will happen is you'll say, wait a minute, I won't get panicked, I won't get bored with this, because if they switch off the stock market and I have to hold this for 5 years, I'm happy to do so. If it drops 50%, so be it. I like it enough to buy more. Not, I will panic if it drops 20%. Got it? So given those are your criteria, which companies fit them? Very few indeed. How do you find them? Value, growth, income,